Today we'll talk about how skewing can give clues as to which direction is the trend strength. Okay, trend can be going up or down, but the strength can be in the opposite direction. It can be going down, but reluctantly. It can be going up, but in a weak way. Okay, so skewing will tell you that, how strong and how weak. Here's the 60-minute chart of the S&P, all sessions. And we can see that we have this deep retracement, although right-handed skew, deep retracement, although skew to the right, going down, that is. And then you have a shallower retracement, skew way to the right. Now, if this was a downward move that came in the wee hours, if you were happen to be up at night, this would be a good short. Okay, good because of persistent right-handed skewing. Not so good because this retracement here isn't that shallow. It's still somewhat deep, although shallower. Okay, so you still have deep retracements. Now let's talk about time range. This one still controls this one. So the dominant is this one over here. And that's pretty deep. This is a deep retracement, although skewed to the right. And then all this choppy stuff brings it down to here. Now, because of these things being so deeply skewed, retracing, this bounce over here, now it's a mysterious bounce coming out of nowhere from the perspective of the all sessions. Okay, why? Because the all session says I have a 261 that it should reach thanks to the right skew. 1113. You got some other patterns over here we might look at. 14. But why did it stop at 18 and start to go up? Okay. Oh, could it be the supporting structures here? Well, let's take a look. Let's go down to the 15-minute chart and look for that supporting structure. And here we see, look at this, super shallow. Now, this thing ought to have gone down a lot. Okay. So, why didn't it? Why did it, first of all, why did it move up over here? And secondly, when it does move above there, it is moving against a, if I may, a strong downtrend that is still in effect. Okay, it's moving. This is moving up against a strong downtrend that is still in effect. Why? Skew to the right at point C over here, followed by a super shallow retracement here going south. This thing seems to want to do this. So any bounce up here, you can think, hey, this bounce should be a shortable bounce in general, just from this alone. But we're going to look for more clues to confirm that. Okay, but that still begs the question: why did this thing move up? Okay, now you can look for this double top. Well, it's not really a good double top here. Oops. Okay, and say, well, I'm going to average this 461. Let me get rid of this. With this 261. Yeah, this is one. It's not the cleanest looking double top. Okay, but I'm thinking time range. This time range is still controlling these guys here. And the 461 is way up over here. That still is kind of an iffy thing. Okay, but how do we know whether this is going to be a bottom or not? Well, we can actually check with the day session chart. Okay, once it opens here, whether this thing should kind of be kept in check or whether it's going to keep on going down thanks to the super strong right-handed skew is going to be seen, and that question will be answered in the daily chart. Okay, again, this thing ought to have reached here, it seems, thanks to the supporting structure looking like it was super shallow to bring it down with it. In other words, it should bounce down here, not over here. So there has to be something over here to cause that to bounce. Now, you can look at the smaller time interval charts over here. However, because these are the driving patterns off of this bigger chart, again, right skew in here, followed by super shallow here, this really ought to have gone further. So the smaller patterns here will still be under the jurisdiction of this blue pattern, which should have brought it down here. But why didn't it? Okay, again, the reason can be found in the day session. Okay, and the day session is still a little tricky. Still a little tricky. Why? Because here I have the widest time range over here, and this thing going down should go down where? 100% or 261. Okay? Again, from this perspective, we didn't hit 16. We didn't hit 1116. Why not? It has to be the supporting structures doing for this. Okay, the supporting structure. I'm going to draw. I see this little thing over here. I'm going to draw the single-sided extension of this supporting structure here. I'm going to go all out. Why do I go all out? Because of the gap down. Here is this little guy's 461 supporting the 2. Again, we missed it. What's going on over there? Let's go down to the 5-minute. Okay, we go on to the 5-minute chart. These two numbers should come together. The average of them, well, in fact, they're on top of each other. Those things should give us a bounce at 1116. Why did it drop shy of that? Here's the answer. There's a third one right here. This one gets pulled down to be averaging with the other two, okay? Because this purple thing that I've shown is still very much visible and legitimate. So I'm going to go single-sided of this little purple guy here. And again, go all out, which means what? 461. And if I go 461 of this one, so we have dominant 261 off of here. And there are two 461s that are above it. So if you average this, this, and this, you'll get the low here. So this is kind of a tough low to catch because it seems like it was coming down very strong. However, once that low was in effect, what we get from the day session, I'm going to look at the all session in a little bit too. On this 5-minute chart, what we get was this pattern right here. Then the news came, housing starts, and also leading indicators at 10 o'clock East Coast time. Boom, this happens. Once this happens, this is the first pattern going north. Now, on the day session, this looks like a right skew. In fact, it is a right skew. What does that mean? That means it's going to go up pretty strong. And the retracement here isn't very deep either. Not very deep. Okay? So somehow we not only started to move up on the 5-minute chart. Again, this is kind of quite decent size, 5-minute. And also skewed to the right. So 1, 2, 3 down, 1 up. Shallow retracement. Well, borderline shallow, I guess. This is telling us that we are looking at a move that could motor up quite a bit, thanks to this start that we have, coming off of a legitimate pair of, a legitimate series of extensions. 261 dominant, 261 dominant here, supporting structure 461 here, and also next level supporting structure left skewing here. And notice how these things are all medium deep, the green and the blue. Okay, so those two 461s, blue and green, off of the blue and green, combined with the red, gives you that low. Now let's go back to the all sessions and see. All sessions off of the 5-minute chart also shows some sort of high lows, low highs, whatever. And again, all of a sudden, this right-handed skew shows up. Guess what? Pretty strong. Okay. Now, this strong move up got stronger. Well, I wouldn't say got stronger, but maintained strength to the upside. And as this thing started to move higher and higher, you can see that there's some sort of wider time range showing up over here, wider than this. Okay, it's almost as if what it's saying it's going to go up very strong. Today was kind of a tricky day because look at this. How deep is that retracement? How is that skew? And how wide is it? How deep is that retracement? How is that skew? And how wide is that? And the last one here, the last one is clearly something that is very, very interesting. Why? Because this last one is shallower of a retracement than the previous. Wider time range, almost, I would say twice as wide as the previous. So this green pattern came in as if it's still trying to move higher. Okay? Because retracement here is 50%, here's 50%, here's a little bit less than 50%, and wider, skewing is neutral. This is sort of a strong uptrend from this perspective. But this type of uptrend can run, but it can't hide. Why? At 32, thereabouts, we can go back to the 60-minute chart and say to ourselves, well, the previous pattern was this. Extremely skewed to the right. And this is coming out of a hole, so to speak. Because remember, we need to go down further, seemingly. So this thing came out over here, and right around the 78%, give or take, is where, well, for those who like trend line, is where this trend line is, okay? But really, it's a 78% of the previous range, give or take, that it needs to climb above if it were to really have a lot of strength to the upside. Okay, so this move up should go above and beyond 70. It did go above the 78, but it wasn't able to go above here. The question is, what happens here? Is it going to stop here and do this or do this? Now today it was tricky to answer that question. It was tricky to when you want to answer that question, it's a little tricky. It's acting as if the whole theme was wider and wider. Let's go back to the 5-minute chart. It's acting as if this thing, this shallow, even shallower and wider, and possibly even further. That seems to be what this upward move may be showing. Again, the reason why is the wider time range, twice as wide as this, and you can almost call this a super shallow situation. But wait, there's a 78% here. So again, there's a lot of conflict here, a lot of arm wrestling between the bulls and the bears right here. The bear says, hey, look, this is a 78%, we should be going down, unfinished business to the downside. And the bull said, oh, we're coming up too strong. What happens here is there's still a lot of bullish residual bullish energy. Okay, as we started to move downwards, lower highs, lower lows. Okay, we're going down. Notice how you have right skewing over here, right skewing over here, right skewing over here, right skewing over here, skew to the right over here, skew to the right over there. All of those things, every one, it's either neutral or skew to the right. That's very significant because although we're trying to go up, thanks to the bullish energy right here, namely right there, okay, that shallow, super shallow, this downward move, from the perspective of skewing, is really not cooperating to go up. Okay, I think that's the question, Lawrence. But when will it give it up? When will this thing give up the ghost? Well, what we want to do is look at the three things associated with a downtrend. In this case, lower highs, lower lows is a downtrend. And we want to see whether this downtrend is getting stronger or getting weaker. Now, what are the three things that we do, that we look for? We look for retracement, skewing, and time range. Okay, and then we want to talk about retracement. How deep is this retracement? Deep. How about this one? Yeah, that's pretty deep. This one, a little shallower. This one, very deep, 100%. This one is still deep, 78%. This one is still deep, about 90%. Okay, so retracements are deep, 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 and deep. How about the other two things? Okay, remember, if you get 2 out of 3, that's the direction that it wants to lean on. The other two things are skewing and time range. How's the skewing here? We talked about this already. Skew to the right. Skew to the right going down. Skew to the right. This is somewhat neutral. This one is neutral. Okay. This is skew to the right going down. And this is skew to the right. All except one is skew to the right. Out of 1, 2, 3, 4, 5, 6 patterns, we have all of them skewed to the right going down, except for one. So you have retracement getting deeper, skewing to the right. So what's the last piece to break the tie? Time range. How wide is this? This. Hey, look, we got wider here, and we got even wider there. So when we get wider and wider, the wider time ranges as we make these lower highs, lower lows, tell us that the downtrend may be accelerating. The skewing to the right persistently tells us that we may be accelerating to the downside. Whereas the retracement says, no, we're going higher because the retracements are getting deeper and deeper. Well, it's 2 against 1. So that's what caused this to really not gain any traction to the upside. Okay. However, because the retracement is the, shall we say, the granddaddy, that's the more stronger animal, that one kept it from falling apart right away. Okay. Again, deep retracement here kept it from falling apart and down right away. All right, that's the key. And that was shown on that 60-minute chart that I showed you earlier as well. All of those things were skewed to the right, but the retracements were very deep, so we're not going to drop that quickly yet. If the retracement was shallower and shallower, then you don't need time ranges getting wider. You just get skewing. Sometimes you don't even need skewing. Retracements super shallow followed by super shallow can show a very strong trend. In this case, retracements were deep, and then getting deeper here, okay? But the wider time range plus the skewing to the right really overcame or overwhelmed the bullishness of this down move as shown by the deep retracements. All right? So that's kind of like what the whole deal was. It was these wider time ranges coupled with right-handed skewing that brought the house down. However, the retracements were there to keep it from collapsing earlier. I think that's how I would say it. Okay. Does that make sense, Lawrence? Now, I can go up to the 15-minute chart real quick here, and you can see that off of the 15-minute chart, this thing had a bar to bar, bar to bar, bar to bar. Here's the first separation that caused us to proclaim that is a dominant pattern because of the clearance here shown here. This will be the dominant structure, dominant measure move, thanks to a wider time range that is visible on the 15-minute chart, while there's no time ranges at all from A to B, just a bunch of overlapping bars. Well, how's point C looking in terms of retracement? Very shallow, okay? So that sets the tone right there. Sets the tone that, yeah, we may be going up, but we have to get above here. This needs to get above there at least. Otherwise, it'll get caught in the 78%, right? Again, 38-78 effect. Measurement strategy number 1, going south. So the key is that these things were unable to, but they were trying to climb above the 78%. 70% of this range is right there. Okay. There's our range. Well, let's see if this last piece coming up was able to break through to the upside. I'm going to go down to the 2-minute chart. Now again, think skewing. Okay, but let me back it up a little bit here. This one came down here, and on its way up, this thing made a thing like this. This thing seemed like a right skew going higher. Again, unable to go above that high. Came down here, moved up here, but look at this. This became a what? 2 bars down and 1, 2, 3, 4, 5. This is a left skew coming into this area. Unable to go any higher. That's the first clue of this thing getting wobbly in this effort to go higher. Now, why do I keep on saying it wants to go higher? Again, due to that super shallow redrawn situation over here. I wouldn't say super shallow, but shallow. Okay, and deep retracements there and there. This one's a little shallower. So all these deep retracements there would think that it wants to try to go higher. But after a while, it's going to give up. And here's what it gave up. The left skewing. In an effort to go up. Over here, even the right skewing wasn't able to carry it through. Was unable to carry it through to the north side. So the left skew, forget about it. It couldn't go any higher. Okay. So that's what caused this to collapse. Earlier over here, there were some left skew to save it. Like, for example, this was a right skew going south. Then you sort of have a left skew, and then this stopped the downward move for the time being, as if it wanted to go higher. But when it does try to go higher, what happens? 1 bar down, 1, 2, 3, left skewing again, going higher, unable to follow through. Okay. In fact, like I said, even the right-handed skew was unable to follow through. So those are like telltale signs of this thing not wanting to go up, although it's really thinking about it. As it tried and tried and tried, after a while, it would collapse. All right, let's see if there's any questions or comments. I guess you have to be alert. Yeah, I guess when these things are flopping around sideways here for in the middle of the day for 2-3 hours, I'll keep it on the 2-minute chart, take a glance, go back up to the 15-minute chart. Usually nothing changes on the 15-minute chart except 1 extra bar every 15 minutes. So I can go back to the 2 or the 1 and just see these things move around to tell me a story, so long as the bigger patterns are already accounted for. Okay. Let's go back to the 60-minute chart and take a look at this from the standpoint of, I think this is how it goes here, right? This guy's still in control. That's dominant. I'm going to skip the skinny guy here and do this. And then this is even deeper. What happens down over here? There should be a bounce somewhere down here. Why do I say that? I'm going to take the dominant structure, extend that. First level supporting structure, and extend that. And I got some numbers here, 11, 13. Now, how did it get there? With a narrow time range. It hasn't gotten there yet. Okay? And if it does make it there with a left skewing, then that should be a place for a decent bounce. Now, the important thing is this move here, from here to here. Okay? It may dance around a little bit. It may, do a lot of hiccups or whatever. But what we have is a dominant structure here, looking like it is deep retracing. First level is not as deep, but the third level came back real deep again. Okay, with all that dancing and whatever, the 261 average is the first place where a bounce may happen. Not the only place, the first place. How do we know it's going to bounce there? What would assure us that it would bounce there versus going down further? Further means 261, 361 combo. Okay, you want to take one of the 361 involved. Well, the answer is from here to here, or here to here, and whatever, then depending on how it gets here, this will be a good place for the buy. Now I want to see where the open is tomorrow. Open is at 9:30, right about there. That's the opening bell, 9:30. The reason why I put that in is that if it goes up here, down here, and then somehow makes it below here, again, time range, still being controlled by these guys over here, and then goes up, and then maybe a little double top coming down to here. That would be a very good buy. Now, I would look for that double top or whatever the market gives me right here to give me a 461, let's say, right down to here. If these guys are skewed to the left, then that would be a very, very good pick. If this last piece here shown in blue, hypothetically, can give us a 461 locally, then we see how we have deep, deep, deep retracements coming down into the 261 average. And this would lead to a nice move if that were to happen. So that's one scenario for tomorrow, not the only one. Okay. Now the reason why I put this line over here is that if it goes up like this and then drops here in the open, that time range will still be taken into consideration to see if that's wider or narrower than these two. Why? Because those two gave us these numbers sitting here waiting for a possible buy at that place at that time. But we want to see what this thing looks like and then how it moves down, if it moves down at all. Okay. Now, it can very well hit this number over here before the open, and the open is over here, and then it might go up. In that case, we want to consult the day session only and see if that can also conform to this theme, to the strategy that you're thinking about using. Okay. All right. Let me see if anybody has any questions or comments. Okay. Does double long come into play? Today's double long. Here and here, do you mean? Double bottom only comes into play if the high in the middle gets taken out. So not really. Okay, we'll use this as a time range to claim that it is narrower than that time range. To go down further, maybe it'll gyrate a little bit and then hit before going higher. Now let's take a look at this from the daily chart, something much bigger. Okay. Today was a little bit of an unusual situation because of the strength showing by the skew going up and down. You got to really see which way it is angling, if you will. Here in the daily chart, we had this. We got the super shallow. We got this last piece here. Let's take a look at this last piece right here real carefully. Okay. Remember, all these patterns were shallow, shallow, super shallow, and all that going higher. But when this thing shows up, this may be wobbling a little bit, meaning it might be going downwards slightly, it might chop around. But in that chopping around, because this pattern right here is still shallow, borderline super shallow, right there, okay? If that's shallow or borderline super shallow, let me double check. Super shallow. Remember, this previous one was super shallow as well. What we're saying is that there's still some residual bullish energy. It's not going to collapse real strong yet when you get back-to-back super shallow going higher. Okay? So, super shallow here, super shallow there. And now as we come down, where do you think a bounce may occur? Well, from a perspective of retracements, I would say 78% of the last range, right, from here to here, the 78% will give you some sort of idea. And that came in right at 11.16. So it may go back up to flop around a little bit. Even if it were to come down, it would still have some residual bullish energy at the 11.16 area. Now, let me go back to the 60-minute chart, all sessions. So this is the 78% retracement level. And when we talk about single-sided extensions into that, the 261 is slightly below it, okay? So the 78 might get stretched out a little bit, but it's there to help support this market by bouncing it up. And it may bounce up to 1130, 1135, and so forth, even if it were to come down eventually. Why? Because you're coming off of deep retracements over here, zigzagging down. And you're going up with super shallow retracements, as shown on the daily chart, going up. So deep retracement coming down in an environment where you have back-to-back super shallow going north, you can see how moves like this morning was able to generate itself in a bullish environment. All right, let's see if there's any further questions. There are only 13 more possible bars until the open. Is a 2-to-1 or even is a 2-to-1 even possible? 2-to-1. Skewing, you mean? We have to see. We have to see, because sometimes, you know, a real up move, I would say 80% of all highs and lows will show up as a left skew. Sometimes it won't. Okay, sometimes it won't, but a lot of times it should. So with that many bars, daily bars, hourly bars at the open, we want to see what patterns will show up for you to buy down. Let me go a little closer to 15-minute chart. Okay. We've had kind of squirrely patterns lately. You got to really do homework and see. What I mean by that is we got forces fighting things in both directions. I normally don't like that because it's not glaringly obvious, it's not very compelling of a pattern. It's almost like it's doing both things at one time. Okay. Actually, I have to take this like here. That's more technically correct. In so doing, now is more closer to the 78% as a possible bounce. This bounce may come in the middle of the night. It may bottom out before the open. It may bottom out before the open. Okay. Or it may go up here for a little short. All of those things are available at the open. In fact, this is probably going to play itself out. It might go up to here and then drop, or here and then drop. Let's take a look at the all day session only. Day session only, I'm going to get rid of all of these things here. Now again, think time range, if you will. If I think time range, let's see how wide, okay, let me see what the low here is. 26 and a half. 26 and a half, okay. Ugly double top coming down. This time range over here still controls this one here. This is a shallow retracement, or is it super shallow? It is super shallow, again, which explains why this move up over here was unable to climb above there. When you're coming off of a super shallow situation here, this is like a measurable strategy for one going short, right there today. Okay, seen on the day session only chart. Anyhow, I will take this ugly double top and I'm going to extend downwards. As I extend downwards, I have a 261 at 08. I got this guy, 06, 16. Again, these days has been kind of weird patterns. Now again, these are far apart, but in the middle somewhere can be that that number. Now we also want to take a look at this move from here down to here and see what that gives us. Okay, because this can be totally different by the time the open happens. It can be totally different. Right? This last piece over here, if I extend that guy down, and I mean all the way down, actually hit the 461 by itself. It did not hit the 461 in conjunction with other things. In other words, you can go a little lower. Let's say you open down here. Okay. Well, guess what? That time range is still being controlled by that time range. Okay. So we can still have this move down to here at about 11:13. And this 461 would be stretching it a little bit to help out the bounce. The thing that I don't like about this 461 is that it's off of a BC where point C is not deep enough. I'd rather have point C deep, and it's 461 to help out. Okay, but be as it may, depending on how, let's go to a 30-minute chart, depending on how the all sessions work, here are some numbers to average. So I'm going to take my 117, 17.7, 16.39, and 8. Divided by 3, I got 14. 11.14 as a possible area for a bounce. What that means is that 461 would get stretched out a little bit further down to 14. But then again, there's my 14.13 number again, off of a pattern that looks like, again, not the cleanest looking pattern here, wacky looking double top, super shallow situation, coming back to the very deep retracement down to about 14 for a bounce. Okay, so that's kind of like a, again, real deep and then shallow and then deep again. Now, some people say that this super shallow retracement is naturally associated with, it's 361, not the 261. If that's the case, it might go down to, or it'll be around the area of 10. Okay. Now, depends on if it opens down here and tries to bounce up, or if it opens over here and then starts zooming down, giving a deeper retracement while maintaining time ranges to be controlled by the 461. So all those scenarios are on the table, as they say. So again, a little downward move for a bounce is expected. Let's see if there's any questions. Larger time range. Oh yeah. If there's 13 more bars, Susan, and it might give you a wider time range, yeah, that could happen. But if it's 2 to 1, that's still the former ones that's half as wide will still have some sort of influence. As long as it's already broke into the upside to 22 from 16. All right, let's take a look at what the significance of that is. Okay. So here we are trying to move up. So what we have, yeah, we might move up right-handed skewing. Again, going up here, coming off of the 461 by itself. Let's take a look at a smaller 10-minute chart. And that's what it looks like. 461 grabbed hold of it. off of this last piece. Is this a good way to buy down here? I would not like to buy towards the end of the day. But this one was such a strong move down. How do we know it's strong? Super shallow along the way on the smaller time interval chart. Let's take a look. Right there. This is also shallow. This is a little deeper, okay, but they're still not really deep. Here's a real deep one over here from the wider time range, but not wider than this guy that gave us a 461. And then you got some deeper here. This 461 was all by itself here. It wasn't there to support a 261 or something bigger. So yeah, it did move up, but it moved up the hard way. Let's see if there's any final questions. Okay. So in the end, we still have some residual bullish energy, even if this thing were to go down, because of the daily chart. The daily chart says that, again, we should be, even if this thing were to go down, it should do this before going down. It always comes back at least 78%, even if it were to drop, because of the nature of how it came up. Very strong. Okay. Over here is the same way. Strong. Over here it went up, came down, went up even stronger here, and then it'll collapse. Okay. So that 78% retest, we call it, is going to be there. Now, if you're a day trader, you're playing for that little up move. This little up move can go above here and beyond, or it can go here and then collapse. Now, how do you know when it's what? If it can go above here with a wider time range, there you go. Now you can really see this measurable strategy number 2 to the breakout sign, if that were to happen. And that would happen if this thing comes down here, dance around here a couple of days before moving up, and take out these time ranges that were just 2 bars wide. In other words, a 4 bar wide time range would easily take care of these and would take it up to a new level. All right, so let's take a look at what has happened so far. What's happened so far is 1, 2, 3, 2 down, and say 1 and 2 up. There's your twice as wide time range to overtake this guy and that guy. That's a good possibility. So, but right now it needs to be supported by this 78%, which it is. Even if this were to go up here and then collapse, which I don't think it can, thanks to super shallow, it would need to flop around. Okay, just like we talked about in, what's that, coffee market. Okay, so that's upward move, it's going to be there. Depending on how it presents itself, is it going to be there for us to trade in the morning, or is it going to, it would have moved up already, and we have to buy it to move it up further? If that was the case, then it'll come through as possibly a measurable strategy number 2. We could do this, and drop down here, and then we open right here, where this is the first move of the day. Boom. And then you keep on going higher. So the first day of the first move may be right here at the open. Okay, if this thing was to be traced out at the pre-market, making this a measurable strategy with 2 bullish buy, that can happen if it bombs out and does this. So bigger patterns control the small ones, and some of the supporting structures, in fact all the supporting structures, will tell a story. The story of whether it can really kickstart the move and help it along, or the supporting structures will not support and conflict happens. Today there was some conflict happening right here, Lawrence, between this upward move that was seemingly strong, that this down move is going down against, and the clues that this is just biding its time to make it down. Lawrence says, does the weekly play into the day trading at all because the chart doesn't look very strong? Well, that's a good question. The weekly chart is over here, okay? Now, what do we see here so far? Well, this is what we see, the blue pattern. This is bar to bar over here. It can very well have another bar like this. That can very well happen. In other words, next week we might have another bar like this to go higher. After all, it's just bar to bar move. So it's not telling us, it's not giving us a lot of details. It's not telling us how strong the move is from here to here. We don't know. But if we're going to go to the daily chart, then, oh yeah, shallow, super shallow, super shallow. Then you can see that. Okay. All the weekly charts telling us is this is in play. So they moved above there. And on a very, very crude way of doing things, we can say it's moved up to 78. It should hit the 100%. That's all we can say. Would it hit there real strong, or would it hit there with a bunch of overlapping bars? Don't know. But the overlapping bars will be, you know, dancing sideways. Will be things that show up as dancing sideways on the daily chart. All right, let's see if there's any other questions. Again, the patterns are not the cleanest due to the confusion factor. But once you see this thing play out by knowing which way to lean on, you can have a good guess. Is it possible to upload the webinars earlier reviewing again, just like before? Yeah, I'll try to upload it. Sometimes it'll take a couple of hours to convert. I'm trying to get the webinars to not be too long, so it won't take as long to convert. But yeah, I'll upload it. Hanson. All right, we'll stop recording here.